So OpenAI just showed its hand on advertising, and the numbers they're projecting to investors, I had to read these twice. They're telling investors to expect $2.5 billion in ad revenue this year, 11 billion next year, 25 billion by 2028, and $100 billion a year by 2030. To put that in perspective, Google's entire ad business did about 265 billion last year. So OpenAI is basically saying that within 4 years, they'll be pulling in close to 40% of what Google makes from ads. This all came out alongside confirmation that OpenAI is targeting an IPO in late 2026, probably Q4, with a valuation goal of $1 trillion. They just closed a $122 billion funding round at an $852 billion valuation, the largest private raise in tech history. And here's a detail that stood out. CFO Sarah Fryer told CNBC they're reserving a portion of IPO shares for regular retail investors, not just institutions. They actually tested this during the funding round and pulled in over $3 billion from individual investors alone. Now, the reason the ad projections are so aggressive, out of ChatGPT's 800 million plus weekly users, only about 20 million pay for a premium plan. That's under a 3% conversion rate, which means the vast majority of their user base is going to see ads. We covered a few episodes back how ChatGPT ads hit 100 million in annualized revenue in just 6 weeks with over 600 advertisers. What's new this week is that self-serve ad access is now live. That $200,000 minimum spend gone, any brand can now buy ads on ChatGPT. Here's the thing that should really get marketers paying attention. Sarah Fryer isn't some random CFO hire. She came from Nextdoor, where she built their entire advertising monetization strategy. Before that, OpenAI didn't bring in a research executive to run finances. They hired someone who knows exactly how to turn a massive user base into an ad platform. And once you're a public company chasing $1 trillion valuation, the pressure to grow ad revenue becomes intense. Wall Street is going to want those numbers climbing every quarter. So what does this mean if you're running marketing? You're looking at a genuinely new ad platform forming in real time, one where people are actively asking what to buy, where to go, what tools to use. The intent signal in a ChatGPT conversation is incredibly rich compared to a social feed scroll. OpenAI says they're maintaining what they call answer independence, meaning ads won't influence the actual answers. That's the promise. But with $1 trillion IPO on the line, that boundary is going to get tested. The practical move: if you haven't tested ChatGPT ads yet, now is the time. Self-serve just opened up. Early results show less than 7% of ads rated as low relevance. And you're reaching people in the middle of making a decision. That's an audience no other platform gives you. Okay, so Andy Jassy dropped his annual shareholder letter yesterday, and for the first time ever, Amazon actually put a number on how much its AI business is making. AWS AI revenue is running at over $15 billion a year. And Jassy said it's ascending rapidly. This is the first time Amazon has broken out AI-specific revenue from the rest of AWS. But honestly, that's not even the number that surprised me the most. Amazon's custom chip business has quietly become enormous. Graviton, Trainium, and Nitro are generating over $20 billion a year in revenue, growing at triple-digit rates. Jassy estimated that if they sold those chips on the open market, the business would be worth about $50 billion annually. So there's a semiconductor company hiding inside Amazon that's already bigger than most standalone chip businesses. Now, here's where the spending gets real. Amazon confirmed roughly $200 billion in capex this year, most of it going to AI. Jesse's exact words were, "We're not going to be conservative in how we play this." That $200 billion is nearly double what they spent last year. And a huge chunk is already committed. OpenAI alone signed a deal worth over $100 billion for Amazon cloud capacity. Here's the marketing angle I think gets overlooked. Amazon Ads is the third largest digital advertising platform in the world, behind only Google and Meta. When Amazon pours $200 billion into AI, a meaningful piece of that investment flows into the ad tools you use on the platform every day. Sponsored products, sponsored brands, the DSP, and then there's Rufus, Amazon's AI shopping assistant, doing for Amazon what Meta's Muse Spark is doing for Facebook and Instagram, using purchase history and browsing behavior to power AI-driven product recommendations right inside the shopping experience. Here's the bigger picture for marketers. The three companies that control the majority of your digital ad spend are collectively investing north of $500 billion in AI this year. That's Google, Meta, and Amazon, that's not a normal investment cycle. That's a fundamental rebuild of the platforms your campaigns run on. The tools are going to get better, targeting will get sharper, creative automation will accelerate, but the economics underneath are shifting quickly. The smartest approach right now is to stay aggressive on testing every new AI feature these platforms ship, because the early adopters are going to have a real edge as these investments start paying off.